As the news of the tariff reduction spreads, businesses on both sides are cautiously optimistic about the future. Retailers in the U.S. are excited about the prospect of lower costs on imported goods, while manufacturers in China hope to regain access to the lucrative American market. As discussions continue, analysts emphasize the importance of transparency in the process. They suggest that both nations need to maintain clear communication to avoid misunderstandings that could derail this newfound optimism. Furthermore, consumer reactions will play a vital role in shaping the outcomes of these economic adjustments. As the clock ticks down to the official start of the tariff reductions, various industry leaders are preparing for possible changes. In boardrooms across the nation, executives are drawing up strategies to maximize their potential gains while navigating this shifting landscape. Meanwhile, small business owners express concern over whether these changes will trickle down effectively, hoping for an increase in consumer spending to bolster their operations. As the reduction unfolds, experts warn that the path to recovery may still be fraught with challenges. International observers are keenly analyzing how shifting tariffs will impact the agricultural sector, particularly American farmers who have faced significant losses during the ongoing trade conflict. With a hopeful outlook, some predict that the easing of restrictions could revitalize exports of agricultural products, encouraging farmers to invest back into their communities. However, others remain skeptical, highlighting the need for comprehensive support measures to truly stimulate growth. Meanwhile, consumer sentiment is shifting as shoppers anticipate lower prices and increased availability of goods. The question now becomes whether this newfound optimism will translate into a spending spree that further energizes the economy. As the tariff reductions take effect, the financial sector closely monitors the stock market's response, with investors eager to capitalize on the anticipated gains. Analysts predict a surge in consumer confidence, which could fuel spending and stimulate economic growth. In this atmosphere of cautious optimism, trade organizations are rallying to advocate for policies that support long-term investments instead of merely short-term fixes. As the world waits to see if these tariff changes can signal a broader recovery, everyone is aware that sustained dialogue between the two nations will be crucial. This moment presents not just an opportunity for economic revitalization, but also a chance to foster collaboration and trust that could redefine international trade relations in the years to come. As the initial reactions flow in, the media is abuzz with opinions on the effectiveness of the tariff rollback. Some commentators argue that the reductions are a temporary fix rather than a permanent solution, pointing to the intricate web of global trade that still grapples with underlying tensions. While there's enthusiasm among investors, the lingering uncertainties serve as a reminder of the complex nature of international relations. Economic analysts insist that a proactive approach is vital, urging not only policy changes, but also a shift in the narrative surrounding U.S.-China relations. This unprecedented agreement marks a potential turning point in U.S.-China relations, showcasing a mutual desire to collaborate and stabilize their economies. As interactions between these two global powers continue, the world will be keenly observing the impact of this tariff rollback on both nations and the broader international landscape.